Let's start with your interpretation of the reporting about this vehicle that Broadcom has set up.
Well, thanks so much. Lovely to see you this morning. And, this is an extension of what we've been seeing for the last several months, which is extraordinary levels of debt coming to the market to build out the AI infrastructure. And the market is having some indigestion with dealing with all of this debt. Just to wrap some numbers around it, it's quite staggering. We've had over $220 billion of debt issued so far this year, which is up more than double from 2025, and that's just year to date. And of course, in 2024, the levels were just about 20. So this is quite a big jump. And not only is the debt quite expensive, but there's so much of it. So it's difficult to find homes for it all. The coupons have gone up. And so many of these companies are now having to face much higher borrowing costs than they had initially anticipated maybe 6 months ago.
The reason that I wanted to get you back onto Bloomberg Tech, Science and Technology Partners, a long bias fund just zeroed in on the corners of the technology market we care about most. Eric, you're coming at this sort of cost of capital lens, right? For lots of people, they go straight to the circular financing question. How do you feel about that side?
Well, I think it, of course, is a concern because to offer financing to a customer and in turn expect that they will be buying your products is indeed circular financing. And so I think that this is a legitimate concern for all investors as they are examining these deals.
In the United States, particularly ahead of the midterms, there is a lot of societal debate about the impact of data centers, and there is action to push back against specific projects. Do you have to model that into your outlook for CapEx, for growth of data center?
I think this is such a good question because this gets at the heart of why we're seeing so much volatility in the market. It's not only that the cost to build out these mega AI infrastructure facilities are going to be higher because the coupon must be higher in order to get it placed, but also one will be carrying that more expensive debt most likely for longer because of two key reasons. One you just mentioned, which is that in states like Pennsylvania, New York, Texas, there are data centers that are facing whether it's regulatory or community concerns that are delaying some of the facility build-outs. There are also shortages of workers to build out these facilities, and there also are chip shortages. So all of this calls into question whether or not even these AI data centers will be built on time, and every month that goes by is another month of paying this very high coupon debt that is associated with this build-out.